I want to show you another tool that I use to track my trades. It's just Excel. I've created a custom spreadsheet where I can track each of my trades that I keep up to date very anally. I do this just because it's the easiest way and most up-to-date mechanism I can use to keep my trades up to date. The most important thing on it for me is really the position sizing. I have got a certain amount of capital that I'm willing to invest in trades, and as I trade successfully, my capital increases, and as I make losses, the capital will decrease, and my trade size adjusts accordingly. This is important to continue the snowball effect of increasing profits. As you get more and more profits, your trade size should increase, so that and your profit or your targets should increase as well. You'll also see a number of columns in there that talk about strategy fields. When I first started doing this, I was trading strictly on my strategy. I wanted to understand, or I wanted to see the results of my strategy, and I kept to it very rigidly. As I've moved throughout the year, I've stopped being so rigid in observing either the entries or the exits, and I'd say especially the exits. There are times when I get out of trades with a small loss just because I don't feel very good about the trade anymore. I don't feel confident that the market's going to move in a certain direction, so I'll leave. Similarly with my targets, I've fine-tuned the targets based on past performance. Again, I'll make a judgment on whether I stay in or get out, and it's much more intuition based now than it is strategy based. Alright, this is Excel, and what I do here is I track every trade in Excel. I give it a unique number, the symbol, the date that I entered into the trade, how many shares I did, at what price, and whether it was long or short. This field, the strategy column, as well as these fields, all have to do with some parameters that I use in my strategy trading, my methodology that I talked about of the crossover, and marking a stop loss and a target for each of those. If you're doing a strategy and you have really well laid out rules, you can do the same thing. You can create columns to help you track what your stop loss should be and your target should be based on whatever the data is, especially if you can't automate it. I kind of found it a little bit difficult to automate using TradeStation. It was a little bit of a pain in the butt. I probably could have done it, but it was a little bit of a pain in the butt. Going on, I then go to the exit field, so I note when I exit out of the trade and what the price was of the exit, and then the reason why I exited, whether it was a loss, a target, or if I just decided to get out for some reason. The strategy exit and strategy entry are what the strategy that I've coded or the rules say that I should have gotten in. And I track that just so I can look at what my slippage is, and slippage would be the difference between what the strategy says you should have done and what you actually did. Sometimes it can be your benefit, sometimes it can be to your detriment. Also, I track the commission. How much money did I spend in commission in getting into the trade and getting out of the trade, and then I make sure my profit and loss takes that into account. So I track all that, but the real key to this is tracking profit and loss at a transaction level. Some other fields that are interesting would be the entry. I just kind of note how much it cost me to get into the trade, just as a guide for me to make sure that I'm sizing properly, not doing anything stupid. And then I've got my a runner of what my capital is, starting with around $100,000. You add your profit and loss in, or subtract a loss out of profit. How does this all add up, or what do you use to? Excuse me. Okay, so the next step would be how do you put all that together? You need a trading summary. So you start with around $100,000. You track your profit and loss. I track it at both a total and a monthly level, and I come up with my current capital. That's important to me to track what my profit and loss is, just to know that I'm doing okay. But it also affects my trade allocation and sizing, which is the other reason why I do this regularly, and I'm very anal about tracking each trade. This allocation and sizing is based on what my current capital is. I figure out how many positions I want to get into. I may exclude money for trading. So let's say I set aside a quarter of my trading for long-term trades. Maybe there's some dividend plays that I want to make out there, or write covered calls or that sort of thing. And then I take the remaining capital and divide it by 10. This is what I'll use to make a trade. Then for each time I get into a stock, I figure out what the entry is, the exit. My loss allocation is pretty much the same all the time. I stick with 5% of what I'm going to trade in that trade, and determine how much money I can lose. For $8,896, I can lose as much as $444. The loss is just the difference between the entry and the stop loss. And then these two calculate how many shares can I trade with by limiting my loss, and how many shares can I trade by maximizing my capital. I want to take the lower of these two. So if sometimes your risk is very small, this loss share might be very, very large, but you're limited by how much capital you have. And sometimes when the risk is great, you want to make sure that you don't get into too large a position, otherwise you might wind up with too large a loss. You may have seen up in that first part a field called expectancy. For those of you who have been trained on InvestTools, they talk about expectancy in the very end of the training. And it's really a way to gauge your methodology and how your trades are working. And you see for this, these are the trades over the first half of the year. I did pretty good. I did okay. My win-loss ratio was under 50%, which means that I had as many wins as I had losses. But you see here, my wins outweighed my losses per trade by over $100. And that put me at, you see it put me at an 18% expectancy, which is so-so. I'd really like that much higher, but my profit and loss from that was about 13%. The other trick that I would point out here that I do is this thing called concatenation. It's a trick in Excel to help you do formula automation. So, and I laid this out explicitly so you can see. So I concatenate AB to this 12, and AB, a colon AB to this 332, and it comes up with this nice little text AB12 to AB332. Then I use that in this formula here. There's another feature called indirect, where you can just use that thing that you just created, and it pretends, it treats that string as something that you would have typed into a formula. So now I don't have to update every formula that depends on this row calculation. I can just go in here and say I made a new trade, 333 is now my end, and it recalculates my trades for both my total profit loss, my monthly profit or loss, and all these other calculations as well. Another thing I want to point out is I created an equity curve, and this is just tracking profit and loss. Actually, it's tracking total capital with profit and loss built in over time. And this is a way to watch and see how your trades were going. I thought I was doing okay, and then I had a major problem in March, which made me go back and reinvent my trades again, and I started adding a reversal pattern to things that I watched for. And then I had a much better curve after that until October hit. And when October hit, it really blew up. So if you want a copy of this template, I'd be happy to send it to you. I'll trim it down to size so it just has a few example trades in it. But you're more than welcome to it. So just give me an email or a ping, and I'd be happy to send you a copy of it.